Good morning, my dear students. Today we are going to discuss about 12th Accountancy, chapter number 5. The topic is admission of a partner. We already discussed about admission of a partner. What do you mean by admission of a partner? So to admit one partner into the business, already they are running some partnership firm, and some are 1 year or 2 years back. After that, they will consider one partner, admit one partner. That is called admission of a partner, and also this person is having lot of expert knowledge in that is marketing skill and accounting skill and human resource skill. Okay, so and also some partners will bring some capital also will consider. Okay, so they will consider the capital also. Okay, so this is called as admission of a partner. Okay, so we already discussed about some important accumulated profit and losses. What is accumulated profit and losses? So this is called as they are not distributed profit and losses to the, they are not distributed to the existing partner. Okay, so next revaluation of assets and liabilities. The revaluation of assets and liabilities is very important concept in chapter 5. Okay, so we have to follow some important rules and regulation in this chapter. Okay, so this is assets or liabilities, next increase or decrease in revaluation journal entry, revaluation account. How will you calculate that revaluation account in chapter 5? Journal entries. Then how will you appear in revaluation account, that is ledger, that is ledger. Okay, so first, what are the assets and liabilities in revaluation account? Okay, asset, these are assets and liabilities. Okay, so land and building, then furniture, then stock, then debtors, then premises. These are the main assets in revaluation account. So some assets are increased, some assets are decreased. Okay, so in revaluation account. Next, liabilities, creditors, sundry creditors, then outstanding liabilities, then provision for bad and doubtful debts, provision for bad and doubtful debts. These are the assets and liabilities, very important assets and liabilities in revaluation account. Okay, so now what is the procedure and what is the calculation, what is the formula to apply in revaluation account? Okay, So this is very important concept in revaluation account, that is chapter 5. Okay. So in chapter 5, assets or liabilities. Okay. When assets or liabilities increase, that the increase amount comes under in journal entry, that is debit side. Okay. So asset, that is increase in assets. So in debit side under journal entry. Okay. Next, in revaluation account, that assets are comes under credit side, comes under revaluation account credit side. Okay, this is very important. This is very important thing. Okay, so in case assets are decreased, in case assets are decreased, so land and building is decreased, or furniture is decreased, stock also decreased. Okay, so these assets are decreased means in that is decrease, the decreased amount comes under in journal entry, that is credit side. So revaluation account data to that land and building, because decrease. In case increase means land and building account data to revaluation account. Okay, so in revaluation account, that is debit side, that is debit side. Okay, you got it? Okay, next, liabilities. Liabilities. In case increase provision for doubtful debts is increase means that company will face loss. That company will face loss. Okay, the company will face loss. In case decrease means the company will face, that is called as profit. That is called as profit. Okay, that is called as profit. Okay, next, this is called in case, that is credit side. Decrease means credit side. In revaluation, that is debit side. Okay. Okay, next, liabilities. In liabilities, that is decrease means in journal entry, that is comes under, that is debit side. Okay, for example, sundry provision for doubtful debts will decrease, outstanding liabilities will decrease. Okay, so and also sundry creditor amount will be written off. Written off, it is called as written off. That is very important concept. Written off. Appreciation. The appreciation is called as increase. Appreciation means increase. Okay, appreciation means increase. Depreciation means depreciation. Depreciation means decrease. Okay, so appreciation means increase, depreciation means decrease. Okay, next, written, write off. Write off. What do you mean write off? Write off is called decrease the value. That is the company the company is also facing some are gaining some profit. Okay, so this also decrease the value. Decrease the value. Okay, appreciation means increase, depreciation means decrease, write off also decrease in particular amount. Okay, for example, write off sundry creditor, write off outstanding liabilities, write off provision for bad and doubtful debts. So in this time, these cases, the particular companies are facing more profit. Okay, so more profit. Okay, so decrease means also here credit side. This is very important concept in when you are calculating that revaluation account, you should follow these rules and regulations. Okay, next I am going to start problem number 24. Okay, next problem number Problem number 24. Okay, that's chapter 5. Okay, so in this time, in this problem, we have to calculate that what are the important figures or important particulars in this problem. Assets and liabilities are listed out, capital accounts also listed out, buildings, furniture, stock, debtors, bills receivable, cash at bank, profit and loss account is listed out. Okay, so then some adjustments are given. On 1/4/2017, they admit Ganesan as a new partner on the following arrangements. Ganesan brings rupees 10,000 as capital for 1/5 share of profit. Stock and furniture is to be reduced by 10%. A reserve of 5% on debtors for doubtful debts is to be created. Appreciate building by 20%. Appreciate building by 20%. Okay, so Ganesan bring 10,000. What is the what important steps? Okay, and information. What are the information given in this problem? Capital accounts also listed out. Assets are also listed out. Building, furniture, stock, debtors, bills receivable, cash at bank, profit and loss account also listed out. Okay, so in adjustment, stock and furniture is reduced. What do you mean reduced? Is reduced. Okay, reduced. What do you mean reduced? Reduced means decrease the value. I already told. In case the assets are reduced, assets are decreased means in journal entry that amount comes under credit side. Revaluation account debtor to stock and furniture. In case in revaluation account, when I calculate revaluation account, that amount comes under, that amount means that reduced amount comes under what? Debit side. Okay, so reduce means that is a decrease the value. Stock and furniture. Stock and furniture. Okay, stock and furniture. 10%. Stock and furniture 10%. Okay, and also reserves created. So 10% means what is the actual value? I already told 25,000. Okay, furniture 1,000. So 10% into 10/100 into 10/100. So total 100. It's a reduced value. Okay, next stock 20,000. Stock is called 20,000. Okay, 20,000 into 10/100. So 2,000. So 2,000. So furniture and stock. Okay, so 1,000, 100 and 2,000 is a reduced value. Next, provision 5% provision for doubtful debts is created. All the information is given in your problem. Okay, all the information given in your problem. Okay, so reserve and surplus. Reserve. This is reserve of 5%. 5% on sundry debtors created. So loss. Here also loss. Created means that is a decrease the value. Okay, decrease is called one of the loss. So what is the debtor value? 16,000. 16,000 into 5 by 100. 16,000 into 5 by 100. So what is the amount? What is the amount? 16 into 800. Okay, amount is 800. So amount is 800. Okay, so 16,000 or 16,000 into 5 by 100. So 800. Okay, 800. Okay, so this is called as, that is reduce the value. The last one, appreciate building 20%. Appreciate building 20%. Okay, appreciate means, what is called as appreciate means, appreciate. The appreciate in the sense of, that is appreciate building. Okay, appreciate buildings. Okay, appreciate building 20%. 20%. What is the actual value? Building amount 25,000. So appreciate means, that is a increase, that is profit. Building 20%. 25,000 into 20 divided 100. Okay, so what is the actual, what is the value? 5,000. What is the value? 5,000. Okay, so this is the steps you have to follow when you are calculating revaluation account. Okay, now I am going to open that revaluation account. Rupees, particulars, rupees, debit side, then credit side. Here also particulars. We already showed one, already discussed, that is the steps, that what is the reduced value, what is the increased value, okay, what is the appreciation value. Okay, so this is the very important thing in the debit side and credit side. Okay, so now stock and furniture used to be reduced. This will reduce 10%. It is reduced 10%. That is the stock to stock. Okay, to stock. What is the amount? 2,000. What is the amount? 2,000. Okay, what is the amount? 2,000. Next, the furniture. Furniture. What is the amount? That is 100. Next, to provision for bad debts. 800. Okay, now what is the appreciation value in revaluation account? By, because have to use by in credit side. When you are calculating ledger, so the in credit side you have to use the term, that is by. In debit side, that you use the term to. Okay, to. So by building. Okay, by building, the amount is 5,000. The amount is 5,000. Okay, the amount is 5,000. Okay, next, what is the total amount? 2,900. 2,900, that is 5,000. The balance amount is 2100. Now I am going to divide that revaluation profit transferred to capital account. This is the revaluation profit. This is called as revaluation profit. That amount transferred to the old partners capital. Old partners capital means in this problem Roger and Selva. This is a old partner, not Ganeshan. Ganeshan new partner. Okay, so Roger and Selva is the old partner. We have to transfer that revaluation profit to the old partner of capital account. Okay, so to revaluation profit transferred to capital account. Rajan and Selva. Rajan 3/4, Selva 1/4. Okay, Selva 1/4. Okay, so 1000, what is the value? How will you calculate that amount? The Rajan is what are the shares of Rajan? Rajan is having 3. So 3:1, totally 4. So 2100 into 3/4. 2100 3/4. That is, you have to subtract the value. Okay, so that value, the amount is 1575. 1575, then 525. This is 525. Okay, 525. Okay, what is the total value? 5000. 5000. Okay. Okay, so this is the answer. 1575, 525. Okay, particulars, rupees, particulars, rupees, you have to follow format. Then 2 stock, furniture, provision bad items. Okay, then revision the profit transfer to capital account is having 3:1, totally 4. 2100 into 3/4 and 2100 into 1/4. 2100 into 1/4. Okay, into 1/4. Okay, so 525. Okay, got it? Okay, this is the first step. This is the step 1. This is called as step 1. In this problem is having 3 steps. One is revaluation account, second one is capital account, third one is balance sheet. Okay. Step 2, that is called capital account. So the capital account is we have to consider what are the format you have to follow. That is particulars, Rajan, Selva, Ganeshan, Rajan, Selva, Ganeshan, particulars, Rajan, Selva Ganesan. Okay, so what is the first thing? That is opening balance. When you are calculating the profit capital account, first you have to mention that is opening capital. Opening capital. Okay, that is opening capital. Okay, so by balance brought down, that is called as opening balance. Opening balance, that is called as opening balance. Okay, so that is called as opening balance. What is the amount? That is already mentioned in liabilities 30,000 and 10,000. 30,000 and 10,000. Okay, next, what is the important things? Revaluation profit. By revaluation profit, what is the amount of revaluation profit? What is the amount of revaluation profit? That is 1,575. 1,575 for Rajan, 525 for Selva. 1,575 for Rajan, 525 for Selva. Okay, so by 1,575. This is 525. Okay, got it? Okay, so இதனை இந்த அமௌண்ட் எங்கேருந்து எடுத்தேன்? From revaluation account. இதனை எங்கேருந்து எடுத்தேன்? From balance sheet. It is given in your problem. See your problem. Okay, so this amount comes from that liability side in your problem. Revaluation, that is profit. This profit comes under which side? That is revaluation account. Okay, so revaluation profit. So revaluation profit, this amount comes from revaluation account. Okay, so 1,575, 525. Okay, so next one, Ganesan bring one, that is amount by cash. By cash. By cash. What? He bring 1,000. He bring 1,000. Ganesan bring 1,000. Okay, next. One information given in your problem, that is general reserve. Okay, so I already told general reserve, profit and loss account, workman compensation fund. These the three things we have to consider in capital account. When you are calculating capital account, we have to consider that workman compensation fund, general reserve, then profit and loss account. Because of this very important, the three things are distributed to old partners capital account. Very important thing. This is a admission of partner. This is a procedure for admission of a partner. This is a partnership deed. Already they frame some discussion. That is already framed some written document. Partnership deed is one of the written document. Okay, so by general reserve, because of the general reserve is comes under liability side. So So this general reserve shows in liability side. If you have to take that amount, we have to take that and also posted in credit side in capital account. That is very important. Okay, general reserve it also included in your problem. So this general reserve is considered in capital account credit side. Okay, capital account credit side. General reserve we have to calculate on the basis of ratio. On the basis of ratio. Okay, 3:4, 3/4, comma 1/4. On the basis of this ratio, 3/4, comma 1/4. What is the total amount? What is the total amount? General reserve 4,000. So how will it distribute? How will it distribute? 4,000 we have to consider in this side. Okay, so 4,000 means 3,000 and 1,000. 3,000 and 1,000. 3,000 and 1,000. You got it? 3,000 and 1,000. Okay, it's a very important thing in your when you are calculating the admission a partner. Okay, so revaluation account, general reserve. Okay, next by so cash or bank. Okay, here cash or bank. So cash transaction, then bank transaction. Okay, they bring amount of capital. Okay, next one important thing, and I already told, work upon compensation fund, then profit and loss account, then general reserve. Okay, the three things included are also considered in your capital account. When you are calculating capital account, the three things included, three things considered. Okay, so two. Profit and loss account, it also comes under in your asset side. So asset side means that amount comes under debit side. In liability side, liability side means that amount comes under credit side. In case while you are calculating this capital account, this general reserve comes under liability side. So that amount comes under in credit side. And another thing, in case profit and loss account or general reserve comes under asset side, so that amount comes under in debit side. Okay, puriyudha? General reserve வந்து liability side கொடுத்தா capital account ல credit side போடணும். profit loss account credit asset side கொடுத்தா capital account ல debit side போடணும். This is very important thing in your capital account. Okay, it's very important things when we are calculating this capital account. You got it? Okay. So to profit and loss account. Profit and loss account. Okay. So what is the amount? 10,000. How will you distribute? 3/4 and 1/4. Okay, 3/4 and 1/4. To 7,500, 2,500. Okay, now that is balancing that value. Okay, so here $10,000. Okay, 10,000. Next, 17,525. So here 16,000. 17,525. And here 34,525. 34,525. Okay, next Okay. Now I have to separate from this value here and there. Okay, what is the balancing value? 27,000. So to balance carry down. This is called as closing balance. This is called as closing balance. You have to separate from this value. Okay, 27,000 have to separate from 20,000. Then here also 10,000 and 15,000. Okay, so this is the format. Then balancing the value 34,525, 17,525, then 10,000. Okay, this is the balancing, that is the closing balance. This amount transferred to next year, that is by balance brought down 27,000, then 15,000, then 10,000. Okay, got it man? Okay, so first you have to mention the balancing, that is the opening balance, that 30,000 and 16,000. Okay, so next this is the revaluation profit already calculated in step 1. This is step 2, 15,575, 525. Okay, the answer. Then cash or bank. Okay, the new partner brings one amount. Okay, then general reserve. This general reserve comes and it shows in your balance, that's liability side. So credit side. In case that amount shows in asset side, means that you have to consider that amount in debit side. Okay, got it? Okay, next that is a 2 profit and loss, 1,500. This revaluation profit transferred to here. Okay, 7,500, 2,500. This is a closing balance. This is called as closing balance. 27,075, 15,025. Okay, so I'm going to start the next. That is step 2. Sorry, step 2 is over. Step 3. Now we are going to start step 3. Step 3 is balance sheet. Step 3 is balance sheet. Okay, step 3 is balance sheet. Balance sheet as on 1st April 2017. Okay, step 3 is balance sheet. Balance sheet as on 31st. So 1st April 2017. Okay, okay. So what is the liability side? These are the liability side. Okay, liabilities rupees, assets rupees. Okay, first in liability side, first I have to complete liability side. First you have to mention that capital account. That is, first you have to mention that capital account. First you have to mention that capital account. Okay, capital account. Okay, you already calculated one value, that is a 27,075, the 15,025, then 10,000. Okay, so now you have to take that amount, that is the opening balance for that partnership firm. Okay, Rajan, Selva, then Ganeshan. Rajan, Selva, Ganeshan. Okay, so Rajan 27,000, 75, 15,000, 25, 10,000. Okay, so total amount 52,100. 52,100. Okay, 50,100. Okay, so this is the capital amount. This is the capital amount. 27,75. So 15,025, 10,000. Rajan, Selva, Ganesh. Okay, this is a balancing. Next, already creditors is creditors in around 37,500. 37,500. Okay, 37,500 creditors. That is a sundry creditors. 37,500. 37,500. Okay, next, here first one, that is asset side, building appreciated, building that is appreciated, add appreciated, what is the value? 25,000. What is the appreciation value? 5,000. Totally 30,000. You have to add, because this is appreciation, very important thing, appreciation. Next one, furniture. Furniture less depreciation, reduce the value, depreciation. What is the total amount? So 1,000 here, 1,000 here, 100, so 900. Okay, next for debtors, stock also depreciate, stock less depreciation, stock. Okay, what is the amount? 20,000. What is the amount? 20,000. What is the depreciation value? 10% means 20,000 means, that is stock. 20,000 here, 20%, that is a 200. 2,000. That is 2,000. Okay, that is 2,000. So the remaining value 18,000. Okay, so next one, debtors. Less provision for bad debts. Provision for bad debts. 16,800. 16,800. 15,200. 15,200. Okay, next, the last thing, cash at bank. In your cash at bank is also one of the asset. Okay, so cash at bank, cash at bank. What is the amount? 12,500. And also we consider one amount because of connection bring one capital, that is add. Connection bring connection capital. Okay, 10,000. Okay, so here 22,500. 22,500. Last one, that is what is the amount? Bills receivable. Bills receivable, one of the asset. Bills receivable, one of the asset. So amount is 3,000. Okay, what is the amount? Building, add appreciated, furniture depreciation 1,100 already calculated in your revaluation account. Stock 20,000 less depreciation to 2,000, debtors 16,000 less provision bad 800, that is a 5%. Cash at bank 12,500 in your problem, and add connection capital, that is a 10,000, 22,500. So bills receivable 3,000. Bills receivable 3,000. So totally 89,600. 89,600. Here 30,900, then 900, then 1166. Okay, then 9 and 8. So 89,600 is the final value. Okay, this is the problem. This is step 3. Okay, this is step 3. Balance sheet as on 1st April 2017. The liabilities also list out, then assets also list out. This is a very important thing. Okay, so 20,000, 25,000 is the it is given on a problem. 5,000 already appreciated, calculated in revaluation account. Furniture 1,000, then 100 already calculated. Stock 20,000, depreciation 2,000, debtors 16,000, then 800 is a 5%. That is a 5%. Mention 5%. Okay, mention 5%. Here 10%. Here also 10%. Here also 20%. 20%. Okay, it's a very important thing. So in case this is a very important problem in your board exam. When you are calculating this, they are asking this problem. That the board exam they are asking this kinds of problem. You have to answer that. You have to answer that 3 steps. You have to take 3 steps. Step 1, step 2, step 3. Revaluation account, capital account, balance sheet. Okay. I hope you are very well understand about this problem. This is a very important problem in chapter 5. Thank you for listening my video. Thank you so much.